The financial services industry has undergone unprecedented advancements, and technology is considered to be the key driver for these changes. On Thursday, 23 September 2010, the Telecommunications Authority of Trinidad and Tobago held its 6th Open Forum seminar on the topic, Electronic Payment System in Trinidad and Tobago, Legal, Cultural, and Technological Challenges. This forum was the 6th in a series of ICT workshops that brought together key stakeholders, including the Central Bank of Trinidad and Tobago, locally based financial institutions, key industry players, and members of the general public.
Many of us would already be familiar with online electronic payment mechanisms. Notwithstanding these advantages, there remain a number of issues which need to be carefully considered in order to ensure that the necessary safeguards are implemented to engender confidence by all stakeholders, including citizens, in the use of this payment mode. This forum will provide an avenue to examine some of these issues, including the following: the availability of a robust telecommunications infrastructure required to be in place to support e-payments and the associated challenges of having such an infrastructure in place. Ensuring a secure environment for the integrity of the electronic payment transactions. And alternatives, for example, that may be available for the unbanked sector of the population. In relation to certain of the issues mentioned, the authority is aware that draft legislation is already in place in relation to data protection in electronic financial transactions, and work is underway, as we understand, in respect of legislation concerning cybercrime. It is anticipated that these essential pieces of legislation would soon be finalized to ensure the necessary legal framework is instituted to facilitate the introduction of electronic payments. An essential ingredient also, as previously mentioned, is the availability of a robust and secure telecommunications infrastructure. In this regard, the local telecommunications providers are already required to adhere to best practice and maintain industry standards as outlined in their concessions with the Telecommunications Authority. The role of the authority in this regard will be to continue to monitor telecommunications providers to ensure that the systems available would adequately support an electronic payment system. Today's forum has brought together key stakeholders involved in the implementation of such a system, and include the Central Bank of Trinidad and Tobago, local and locally based financial institutions, telecommunications professionals, key industry players, members of the public, and the authority.
All around us, we see evidence of transactions taking place, where at least part of the process is carried out electronically. Ms. Joan Jong, Deputy Governor, Operations, at the Central Bank of Trinidad and Tobago, demystifies the language and gives us a window into the importance of ICT information communication technologies in the electronic payment systems and the developments taking place.
The national payment system really encapsulates all the various payment systems in the country. Now, as you will be aware, modern payment systems are moving away from paper-based instruments such as checks to electronic methods of payments such as credit and your credit and debit cards, the ACH, and the real-time gross settlement system. This evolution, which in part has come about because of a demand for safer, faster, and more secure means of payment, has been facilitated largely by the rapid development in ICT. Now, this slide that we have up now shows the progression towards electronic payments in Trinidad and Tobago. Post-independence, we see the emergence of checks being used more and more. And then the debit and credit cards were introduced in the 1980s, initially with more limited services. And then in 2004, 2005, we introduced these more automated systems, the RTGS and the ACH. Let me just mention here, because these terms may be not so familiar to some of you all all the RTGS says, and I'll be using this acronym, it means Real-Time Gross Settlement System, and it really means exactly what the word says. It means that when you use this system, payments are settled in real time, almost instantaneously, and they are settled on a gross basis one by one.
Over the last few years, the mobile and wireless market has been one of the fastest growing markets in the world. This mobile technology has now been adapted to allow banking services to customers via their smartphone devices using SMS, WAP, and now special client programs called apps. Mr. Karl-Johan Rosenquist explains the advantages of introducing this banking model in Trinidad and Tobago.
And for this purpose, I have sort of invented a new mobile payment system that's called MobiCash. MobiCash means cash in your phone, or virtual cash in the phone, because the cash is actually sitting in the bank's settlement account with the central bank, because it's actually settled in the RTGS using the ACH. So we're adhering to the law, and we follow the regulations set by the central bank. Now we have some cash in this phone. What can we do with it? Well, first we have an employer here. This employer can pay into our account, into our mobile phone account. Well, how do they do that? Well, they go through the ACH, send a message to the ACH, that ACH take that money, clears it, and settles it in the RTGS, and the money comes into your account. This may not be instant because it goes through the ACH. Now, let's see how instant transactions work. This is a transfer from a mobile phone to another mobile phone, a P2P. This happens in real time. Now the question is, does the bank have the balance? And that's why we use the RTGS, because the RTGS is the mechanism by which we check whether your bank is still liquid and still has your money. What happens if the two banks don't settle? If they don't have the money in your bank and they've spent it on something else or they've gone bust? Well, we are going to put in a new rule within the ACH and the RTGS environment that says if you don't have the finance, if the bank doesn't have the finance, the surviving banks must pay.
Concerns and comments from the audience were expressed, among which was the tardiness in implementing some systems and the security safeguards for the public.
We can actually pay PayPal accounts, so we can buy, and God knows we need money in here now. We can't receive at all. We need the central bank and the banks here to do something about it. We need that people here can set up accounts online and receive payments. I mean, we don't have that here. We don't have that. You go to many countries in the world, all of us are, we travel, and you can do that. So we are at a stage now, we have to get money into this country.
And interested in setting up a merchant account for online sales and so on. It's been, I can't say up and down, it's just been crazy. Hell, pure hell. So I want to know what are we doing? I mean, we're not going anywhere if we've been dragging our feet. I mean, that's why we're number 84 on this list. And Barbados is way ahead of us.
I believe currently each bank has developed its own infrastructure for internet banking according to its own internal security requirements. Now, the overarching requirement from the central bank perspective in terms of the financial institution supervisory arm of the bank is that banks make sure that their technology is safe, secure, sound, adherent to international best practice standards, etc., for IT security. Now, we try not to be terribly prescriptive in terms of allowing banks to develop their technology.
Acquiring credit card transactions over the internet is risky business. Let's say, for example, you set up your merchant site, and you are selling cell phones, right? And I decide, you know something? I'm going to target you. So I get a lot of fictitious cards, and I do a lot of transactions, and they're all authorized, and I order 1,000 phones from you. and you ship 1,000 phones to me in Claxton Way, and I get 1,000 phones, correct? The rules of the credit card say there are 45 days, they vary, between 45 and 180 days, in which this transaction could be challenged by the cardholder and returned. So they were fraudulent, they were returned, and now the bank comes to you and says, I would like to get back, because the merchant agreement you signed says that if this is fraudulent, you'll be liable. I would like to get back the $100,000, please. You have to pay up that $100,000. So you've lost your $100,000 and you've lost your cell phone. Now the issue is, that's why they're going to probably ask you for collateral.
I can tell you from a financial institution perspective that we have merchants and we have business companies who resist even what we have on the domestic market. They resist it. They look at the cost because the infrastructure to them, but they have not considered that the bank is also putting in an infrastructure that takes into consideration the real time for you, to ensure that when you press a button, that moves electronically, efficiently, and accurately. Yes, we are taking our time, because once we go and we commission that, if we make one mistake, it is a hue and cry as to where is my money, and I can't have the integrity, the reputation of this bank is under question.
As professionals on the financial side, we continue to seek greater understanding of the ICT environment, and we wish to encourage our ICT professionals to take an equal interest in the payment systems. Ultimately, the goal is to have an efficient payment system that meets the present and emerging needs of our citizens. Let us all, therefore, do our part towards this objective. Thank you very much.